Apple heavily exposed to supply side risk, the possibility of supply chain disruption, heavily exposed to demand side risk, the possibility of a slowdown in China, and a stock that is still near several dollars away from all-time highs. The latest news, Foxconn delaying the return of workers to its main China iPhone plant. Wedbush warning about the ongoing shutdown, saying the news will be, quote, a shock to the system and disrupt the supply chain further for Apple on both its core iPhone franchise and AirPods unit production, which is already facing a short supply. Wedbush's Dan Ives joins us now on the phone. He has an outperform rating and a $400 price target on shares of Apple. So, Dan, let's talk about that. Clearly risks on both the demand and supply side, and yet a stock that's still several dollars away from record highs. Why, Dan?
Yeah, I think on the demand side, especially this quarter, iPhone demand has been much better than expectations. So it feels like the range of guidance they've given, it's mid to high end the guidance in terms of where they could hit. Not really too much worse on the demand side. The bigger issue is the supply chain. I think right now, line in the sand, we go another 7 to 10 days of the factory being closed. That's where it starts to crimp supply chain and takes 1 million units in terms of iPhones off of estimates for every 7 to 10 days it's closed.
So, Dan, the conversation you and I have had it with many other people as well. With these risks in mind, is that consumption destroyed or consumption delayed?
It's delayed, and that's why we continue to be buyers of the stock, because I view it as more of a timing issue where potentially maybe as much as 3-4 million units get moved from March to June. Doesn't change the 5G super cycle for the year, or we believe there's a $400 stock. We view more as a timing issue rather than quote-unquote lost revenue.
Dan, this is a conversation on the macro side of things, getting out to 35,000 feet we've had since the start of this program. We've been having for the last several weeks. If we get any hit to demand, the recovery will be V-shaped. And it sounds like when it comes to Apple, you agree with that view, Dan. I'm trying to understand the risks around that view. Can you identify the risks around that view? What are they? And what would be the inflection point for you to step back, and say things have changed?
Yeah, the biggest risk on that view would be China in terms of demand. Around 20% of units this year in terms of iPhone units are going to be out of China. If you don't see the V-shape out of China going into June, going into the super cycle, that would be of a concern. But I can tell you as of right now, 60 to 70 million iPhones, window of an upgrade opportunity in China. We think Apple on track to convert more than half those over the next few quarters. So at least that all sort of gives further credence to that V shape that we see going into next quarter or two.